Hi everyone, this is Dao Chai. I'm at the University Library right now. You're going to be hearing students in the background. Okay, we're going to be looking at manual payments, accounts payable, SAP S4HANA. Let's start off with a little inspiration from Steve Jobs. If you are working on something that you really care about, you don't have to be pushed. The vision pulls you. Okay, so manual payment. Um, Broadly speaking, posting a manual income payment clear customer open item and posting manual outgoing payment clear supplier open item. So we're looking at this image, posting outgoing payment. So that would be for supplier. For credits and debits, that would be reverse, right? So for clearing credits and debits, it would be the reverse of that. General information. In this area, you enter the company code, posting date, document date, value date, and reference. So the value date, the date on which the payment is actualized. Bank data. In this area, you enter the bank general ledger account, house bank ID, account, amount, and currency, any transaction fee, and an assign by the relevant short key. So and the assignment, so that usually filled automatically by the relevant short key. Okay, so open item selection. In this area, you enter the supplier who is making, or right, if it's customer receiving the payment, and select shows item to get a list of open item posted. Okay, so post outgoing payment. That's what we're looking at right here. Well, the screen is the post outgoing payment screen. We're going to be looking at the bottom, the open item list. In the open item list, when you select the relevant open item, to clear the item or transfer to the item to be clear list, right? So that could be invoice, debit, credit memos, unassigned payments. So here's the discount per item is proposed per the payment method, due date, and also the discount. You can also change the proposed discount in accordance with the tolerance assigned, right, to the user and to the customer or supplier. When the balance of the document is 0, you can then simulate the entry to check all the proposed line items. So that is if the display at the top right of the screen, right, is 0. So once confirmed, you can post the documents. The open item are cleared. The payment document is assigned as the clearing documents in the clear line item. Okay, here you're looking at clear income payment. So posting on account, you can select to post on a customer or a supplier account when you post a payment to either one of those accounts, right? So without reference to a specific item, right? So let me repeat that again. You can select to post on a customer or a supplier account when you post a payment to a customer or supplier account without reference to a specific item. Right, so this is used when clearing isn't possible at the time of entry. When clarify, you usually match the payment without the relevant open item. This option can be used when the payment difference is too large to manage in other ways. So right here, the clearing income payment, right? So when payment difference do arise and they are outside your assigned tolerance limit, or you don't want to post a difference as a loss, you can select to post a partial payment or handle the difference with a residual item or even with a separate payment difference posting. You can enter customizable reason codes to authenticate the reason for the difference. Okay, so a partial payment doesn't clear the open item. Both the open item and the payment remains as open items on the account and are connected through the reference to the invoice. When the third item is received or sent, you then clear the three items amongst themselves. For example, open item and two payments, or invoice item, payment, and a credit or debt memo. Now, with the residual item, the system clears the payment and the open item and then generates a new open item from the difference. So both the payments and the original open items are cleared. The new open item is posted under a new document that references the original document. The new item can inherit the payment terms or the original item or be assigned different ones. So finally, you can handle the difference manually by posting. For example, to separate general ledger accounts or posting on account. You can also write the difference off as unrecoverable through manual posting to a loss or a gain account. Okay, so now for foreign currency, another type of payment difference can occur from currency exchange difference. The exchange rate at the time of invoicing for the invoice in foreign currency can be different from the exchange rate at the time of payment. The payment is made with the correct foreign currency amount. However, you may have loss or gain from the currency fluctuation. So in customizing, you assign a revenue or expense from the foreign currency valuation account to the reconciliation account and any general ledger account that have transactions in foreign currency. The definition is per reconciliation of our general ledger account and can be valid for the following: all currency and currency type, specific currency type, specific combination of currency and currency type. The system handles all such difference for all currency and current types automatically. So posting the realized profit or loss to the relevant account if all customized settings are maintained. Okay, this one was good, so thank you.